Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is June 26, 2013, and today we'll be covering two key pairs for you guys. That's the dollar yen and the Singapore dollar. So now I'll start with the dollar Singapore dollar. On the hourly charts, and this is a pair we touched upon earlier in the week. And it's a pair we looked to enter short and did get stopped out, but our targets were met with the pair, and now we're looking for it to push higher. So just to do a brief recap, we saw that wave 1 ended at this point, and then it was followed by a 61.8 retracement on wave 2, and then wave 3 already passed through the 100% mark of wave 1, so the next target is 1.618. Which is at that 1.285 region. So we should see prices push higher there. And as we jump down on the 15-minute charts, see that within that wave 3, wave 1 ended at 1.26285, and then followed by a 50% rate retracement for wave 2. Wave 3 was flirted with that 1.618 level, and we entered the pair short at 1.27667, and we were looking for this pair to push lower. It tacked on a 30 pip stop, so we were slightly under that 1.28 level, and we were looking for this pair to go short, for it to land at that 50% mark of the entirety of wave 3. So we're anticipating a 50% retracement on this pair. And it did, but it just took us out of the pair as it pushed about 13 pips past our stop, and then it took us out. But we are looking for this pair to go along now as it hit our targets, and we should see it push higher. So now on the hourly charts, our targets were 128.5, so about a 200 pip move from that 50% retracement. But on the 15-minute charts, it's not showing us that, as this is our extended wave, or it's looking to be our extended wave. So wave 3, so we're expecting wave 5 to do about the same move it did for wave 1. Now we could see it push slightly past, as wave 3 did not hit that 1.618 level, so we could see it push past 128 a little bit, but we are expecting a break of 128 on this pair. So a good region to get short this pair is about 127. If we could catch it lower, that would be great. So that 126.8 region, price action push that low, that would be a great area to get long this pair. But you can enter this pair long, just put a stop below that wave 4 lows, so below 126.5, and then look for this pair to break 128. So from this level, that's a 100 pip gain. So that'll be a 2-to-1 risk to reward ratio. So look to enter this pair slightly below 127 long. Now shifting gears to the dollar yen. This was touched upon sometime last week, and as we jump on the hourly charts, let's do a little recap. We had waves 1, 2, 3 was the extended wave, shown by the increased volume. 4, and then wave 5 is completed. And then we had that ABC, which gave us that first A wave, and that lined up also with wave 4. So now we should see that B wave. So now we got a break of this trend line that was intact for a little over a month now, and it appears that this pair should be taken off. Seems as if we got that retest, and then it should be skyrocketing from this point. But it appears that we should be treading lower with this pair, and as I jump down on the 50-minute charts, show you guys why. So within this now, we're seeing that we are currently in a head and shoulder formation. So we got left shoulder and right shoulder. Left is indicated by that third wave, within that C, and then that right shoulder is indicated by that B wave. So now a C wave is in play. So now as we take a closer look at things, we see wave A ended in this area. Wave B right here did 76.4% retracement. And wave C, it shot slightly past that 1.618 extension of wave A. And it's still below that 2.618 level though. But it appears it ended here with this pattern formation. And also as we take a closer look at the impulses within wave C of that larger wave A, see that wave 1 ended at 95.804, and wave 3 was extended slightly under that 2.618 level. And then wave 5 ended slightly beyond 100% of wave 1. So now as we take a look on this side of the coin, and we see wave B retrace 76% of wave A, and then wave C, if extended by 1.618, it should end at this ascending trend line, which is where we're looking to get long again this pair. So this pair is giving us a great area to get short right now at that 97.78 level. Good area to get short with stop losses above wave B, the wave B high. So stop loss is about 98.3, and that would be a slightly over 50 pip, which is what you would be risking, and looking for this pair to push towards 95.5. So from this area, that's slightly over 200 pips. So we'd be risking 50 to get 200, 4-to-1 risk to reward ratio, which is definitely in our favor. So definitely a good area to get short this pair. Or for those, you can wait for a break of this neckline for that confirmation, and a retest would be in order. So a break and a retest, and you can get short that area, and that would be around 97, and that's still pretty good, as you would stand to make 250 pips. At this area right now, it's slightly over 300, but down there you stand to make, at that 97 mark, stand to make about 150 pips rather, which is still pretty good. So let me just jump on another pair as well. This is a pair we touched upon earlier in the week, Aussie Kiwi. And with this pair, we were just looking at a retest of that break. It broke this trend line, and we were just looking at a retest. We were looking to enter upon the retest. So I said in 91.191 would be a suitable area to get long. And for you guys that entered that pair, you guys are up some stuff right now, and you can just trail your stops with this one. Just monitor this trend line. We are looking for it to push towards 122, so just hold tight with this pair, but just trail stops. So as it pushes up higher, just bring that stop loss right behind it. Price action has not taken off as yet within this third wave, but we are seeing higher volume in this, so we should see price action shoot off soon. Other pair I want to touch upon is that Euro Pound. Also touched upon this pair early in the week. Let's just look at the the hour charts rather for perspective. And with this pair, we are looking to go along this pair at 84.5, as that would round out wave C. So looking to go along that area and looking for it to push towards 87. Now as we jump down on the 15-minute charts, Euro Pound, we see that we had wave 1 completed right here. Wave 2 was a run-in flat correction, completed at that area, and then wave 3 did a 100% move of wave 1. So now we're expecting a retracement at least 50%. So we should see price action push towards 85 before selling off down to our targets of 84.5 before dropping 50 pips. And then we would look to go long that pair. Stop losses below that wave below. So stop losses below 84. Slightly below 84, and we should see this pair push towards 87 as I stated earlier. So looking for 250 pip move with just risking 50 pips, so that's a 5-to-1 risk to reward ratio. Should look pretty good. So just look for that pair to push lower and then for the push higher. So thank you for watching the video today, guys. Any question or comments, definitely feel free to jump in the chat room and fire away. Paul or myself will be glad to assist you guys with any questions you guys may have. And for you guys that are not members yet, definitely feel free to follow us on Twitter, as we do give a couple of charts out there. And you can just check out the chart of the day as well, though that's free to you guys. And we are also doing our trial, so you can definitely feel free to just try us out and see if our services is for you. Once again, thanks for watching the video, and have a safe week trading.